Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Yesterday, the dollar bounced after the Fed cut their rates, and they weren't more or less hawkish than expected. Now, ultimately, it's been about a 24-hour window where the markets, the currencies in particular, have reacted to the Fed. Now, that dollar balance has dissipated through the night, and it's actually trading lower. It's testing that major three-star support we referenced on the FX Rundown last night. This level is crucial, 95.5. Needs to go below there and close below there on a weekly basis to encourage a rollover. Now, on the euro, we have major three-star resistance. It's getting tested. Our levels from yesterday on the FX Rundown are all intact coming in today and through today's close. So watch these levels. They're going to be crucial again through tomorrow. The other one that's being tested is the yen. The yen is trying to break out. Remember, the Bank of Japan met last night. They were overall upbeat. They weren't downbeat despite the turmoil. However, they're going to that quantitative easing, that very loose policy is going to remain intact for some while. But the yen has held well with this turmoil in equity markets. The safe haven attributes of the yen, coupled with a weaker dollar, is a perfect storm to see this market trade higher. Look at the technicals. We could get a breakout in the yen, and what we've called as the most unenthusiastic trade on the board can become a little enthusiastic. We had that trend line support hold perfectly, and now we could get a breakout to the upside. So you need that close above major three-star support tomorrow. All this is going to be crucial. Again, that's the dollar three-star support, the euro three-star resistance, and the yen three-star resistance as well. Watch those levels through tomorrow. Tonight you have CPI data coming out of Japan. This could potentially get a stronger than expected read, encourage a higher yen on an already favorable market landscape. So watch for that number. And then tomorrow you have consumer climate data from from Germany. You have French GDP. You have GDP data from the UK. All of that's going to be sink into the currency market early. And then coming from the US, we have a deluge of data. You have final quarter 3 GDP, durable goods as well early. You have the final read on December Michigan consumer sentiment, core PCE index as well. That's an inflation indicator with personal spending, personal income. All of this is going to be crucial playing into that dollar. Weaker data will push that dollar below that big level of support and encourage further selling on a weekly closing basis. Now moving on to the Canadian dollar and the Aussie dollar. They are a very somewhat quiet session given the fact that the equity market and the risk sentiment has shriveled up today. They've held arguably well or at unchanged, and the Aussies at our pivot level. Technically, the charts are broken. We can't be upbeat, but we did lay a landscape out or a roadmap out what you would need to see for that Aussie to close above in order for us to get excited again. But ultimately, despite the dollar, even if it can roll over the US dollar, an equity market that's in turmoil is not going to be supportive for being long the Aussie. You would rather be long the yen or the euro potentially too. So check those out. Give us a call. We're here to talk about it in more detail if you'd like. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss, is not suitable for all investors. Thank you.